Jim, I'm excited to chat with you and hear your perspective. Thank you so much for sitting down with me today. By way of a short introduction, you're currently the chairman of Citizens for Sound Money, a non-profit focused on encouraging the use of sound money and protecting people's right to choose their tender. Could you give our listeners a brief introduction to the vision of Citizens for Sound Money and what your personal catalyst was, which led you into that sound money ethos?
Yeah, well, first off, thanks for having me on. Great to be talking to people in Australia for sure. So personal catalyst goes back a ways, all the way back to my childhood. I studied Russian, went to the Soviet Union, and that experience made me really appreciate and love free markets. And then when Ron Paul ran in 2008, I got active in his campaign, and that's when I found out the role of sound money in terms of free markets and how important that was. It's half of every transaction is money. I wound up running for state senate and getting elected in New Hampshire, and then was his campaign chair in 2012. So that's where I got my love of free markets and sound money as well. And then when things started unfolding over the last couple of years, I decided it was time to get active again and try to do something. But instead of doing it politically, thought I could be more effective perhaps as doing it through a nonprofit. And so you nailed it in terms of our mission. It's to encourage the use of sound money and protect people's right to do so. So we're not out here trying to advocate the dollar be backed by gold. Instead, we're trying to tell people that you can start using sound money today. You don't have to wait for the government to do the right thing, because they probably won't, or they will when it's already very, very late in the game. So instead, start using sound money today. And then the second part, defending the right to do so, that's where we might engage in lobbying efforts at the state level, federal level, to try to help protect people's right to use sound money.
Really fantastic. I saw on the Citizens for Sound Money website that you now have those minted 1/5 of an ounce silver coins in that 10-pack. And it made me want to know, how do you pitch sound money to people who aren't paying any attention to the financial landscape at all?
Yeah, and it's funny because, over the last decade, I've talked to a lot of people about gold and silver, and, hasn't necessarily been all that much interest at times. But when you put one of those coins in their hand first, it really helps the conversation a lot. And you can point out that, it's 1/5 of an ounce. That used to be essentially 20 cents. A dollar was an ounce, so that's 20 cents. But now that coin's worth $5 or $6. So it just shows how your dollars being eroded. So that's generally what I've been doing. Is if I tip somebody, I explain, that's 1/5 of an ounce. That used to be 20 cents, but now it's worth $5 or $6. That's what's happened to the dollar. And the conversation's gotten really easy over the last year, or a lot easier, because people see all the money printing, they see the inflation, and so they're a lot more receptive. But having some silver in their hands really is a great conversation starter and really helps the conversation.
It certainly does. I've noticed that in my own conversations with trying to bring people around to precious metals as an option for portfolio protection in a way, that getting people to have some physical coins in their hands really does seem to make the penny drop. Not to be too on the nose with the saying, but it begs the question: what are those sort of cultural or psychological barriers that you seem to see that are in the way of the adoption of sound money?
Well, I think the biggest one is, okay, that's great. We know that's going to hold its value, but on day-to-day expenses, I can't use that as money, and that's why I'm so excited about the digital asset space. Where you can have a gold and silver backed currency, and then perhaps have a debit card where you can very quickly liquidate some of your silver to spend it. That basically opens up sound money to the world, really. I think that's going to be the key, and that's part of, and encouraging people's use to do so. There's the physical aspect, and that's why we're doing the coins. But in this day and age, I think that digital aspect is a key, and so part of it is just educating people that this is a possibility for them now.
Yeah, one of the bigger barriers that I've found is broaching the concept of even just money in and of itself, getting people to understand that in a lot of circumstances, even though obviously the relative value of, say, a silver ounce has changed over time, it is still technically, in a lot of cases, legal tender. And although, as you pointed out, it's kind of hard to go to your grocery store, like chains, or like your Walmarts or your big stores, and hand them silver coins, they're not exactly in the position, the individual there, and then the institution isn't really in the position to accept it, although it is technically legal tender. And so when you're transacting from, say, an individual to an individual, you can definitely use it.
I was going to say, so legal tender may have different meanings in different countries. Really, in the U.S., when you say like the dollar is legal tender, that basically means if somebody comes in your store and they want to buy something and they offer you dollars, you have to take it. It's kind of it's currency by force.
Right.
Gold and silver are more, the real money, but they may be accepted. And a lot of people don't understand that. They say, "Well, I thought we had to pay in dollars." No, you don't. You don't have to pay in dollars. If somebody tries to pay in dollars, you have to accept them because of legal tender laws. But there's no prohibition, and Bitcoin's kind of opened up the world to that. People are transacting in Bitcoin. There's nothing illegal about that. That's totally legal. And another misconception people have is, well, the dollar's money because that's what the government says. But governments did not determine that gold and silver is money. That arose naturally, and governments then just get in the middle of it and then mess it up. But governments don't determine what money is. People do.
That leads into another question I had, which was, could you talk about Gresham's law, the theory, and then also sort of what we're seeing in current modern markets and how it's sort of playing out? Because it sort of seems to me that it might be in force right now.
Yeah, definitely. So Gresham's law is essentially bad money drives out good, or in other words, if you're sitting on a stack of dollars and you know that the dollar's value is being eroded, and you're sitting on a stack of gold and silver, you're naturally going to spend those dollars first. And as inflation gets higher and higher, you're more likely to kind of treat it like a hot potato of, as soon as you get paid, you're going to go spend that and turn it into, food or whatever you need to get by on. And that's where, all the money printing leads to inflation. But when that psychological aspect kicks in of, oh my goodness, I need to spend this quickly to get rid of it because it's going to lose its value, that's when things take on that kind of hyperbolic growth in inflation, like you saw in the Weimar Republic. That's where hyperinflation kicks in, is when that psychological aspect takes hold. So that's essentially Gresham's law, and it's really tricky because then how do you get people to start using gold and silver as money? When it's good money. But I used to tweet that people said, like I bought a grill using silver. They said, "Why are you spending your silver?" And I said, "It's because I don't have any dollars." Why are you holding dollars?
Yeah, I'm not positioned in fiat, so I was using the money I had. I love that. With that in mind, you mentioned inflation, obviously a bit of a hot topic issue at the moment. I'd like to zoom us out a little bit. And we have national sovereign currencies, fiats, as you mentioned, inflating heavily. We start to see the beginning of rate rises coming out of central banks, and obviously crypto adoption has come a long way as well. On top of all of that, it appears, depending on who you listen to, that we're at the edge of a commodities bull run, or at least a big trend reversal on value versus growth. And I just sort of wanted to get your perspective on what are some of the key factors that pique your interest, that drive your decision making, and what sort of a broad scenario you see playing out in the next, say, 3 to 5 years.
Yeah, and that ties in. I forgot to completely answer your last question. You said, don't we see Gresham's law in action right now? And essentially, yes, you do. Basically on a countrywide levels, where you see some of the foreign countries like China, where they've got these dollar assets and they're spending them as quickly as they can to get commodities. And that's kind of a fuel to run up in nickel and copper and all these commodities. But yeah, I definitely think that we're in a, kind of a sector rotation where paper assets, have reigned supreme, treasury bonds and things like that. And I think that's coming to an end, and those paper assets are going to be chasing real assets, gold, silver, base metals, all the things that we need. And companies that mine this stuff, they've been, kind of downtrodden for so long. I mean, it's pretty crazy. Mm-hmm. You'll see Amazon and Netflix and these companies that don't make any money going for these crazy valuations. Meanwhile, you see, copper miners going price to earnings ratio of like 3 or 4 to 1, or a price to free cash flow basis of like 4 to 1. Wow. Some of them paying dividends of like 10%. So why are people buying treasury bonds that pay a rate, massively less than inflation? So yeah, I think there's going to be this big sector rotation. I think it's kind of started, and then it stops and it starts again. But definitely in the commodities prices, you certainly see a run up over the last year.
Yeah. I know you're interested in, as you've mentioned, how, say, asset-backed digital currencies and commodities-backed digital currencies can enable individuals to opt into a parallel monetary system. And maybe want to ask, what sort of portfolio balance do you like to keep between the physical metal, a digital version of it, and or stock ETF positions, and obviously, as you mentioned before, a pretty low exposure to cash? What sort of breakdown there do you try and keep from a personal risk profile?
So I guess this is me talking as a person rather than chair of C4SM. But so let's see. In terms of physical on hand, I like to tell people, paint your doomiest and gloomiest scenario where the power's out, you don't have access to anything electronic, and you need to buy your food and all that kind of stuff. You should have enough physical for that based on what your outlook is. I'd say a month or two worth of spending for sure is a good amount to have on hand, and hopefully that never happens. But
yeah,
but the advantage of that physical is completely absent counterparty risk. It is for those people that say you shouldn't put anything outside your house. Well, it is subject to theft risk, and the more well known you are, the higher that is. So I do not have a big stash at home, just so everybody knows. So other than that, for how much you keep in like an asset-backed digital currency, I think that really depends on your confidence level in the company that's holding that, because that does introduce counterparty risk, but the trade-off is then you get better liquidity for it. Mm-hmm. And I think basically you can treat it like a checking account, have enough in there to meet your monthly needs. And even as big of an advocate for sound money as I am, the reality is most of your costs are denominated in dollars. The gold and silver markets are still highly leveraged futures markets and subject to a lot more volatility than they should be. Once they're widely adopted as money again, then that volatility will go away or greatly decrease. But in the meantime, you should have enough in dollar assets to pay your upcoming bills. I've been on the other side of that where I just had everything in gold and silver, and had to pay for college, and it was down at the time, and so it's definitely wise to keep upcoming expenses in dollars. I'm personally invested in the mining sector, gold, silver, but base metals as well. But that's me as a person. You have to kind of know what you're doing, or get somebody who knows what they're doing. In my case, to manage that kind of stuff.
On silver as a commodity, as an investment, and potentially and hopefully coming back into use commonly as money. Could you go through a little bit of your vision of how we will see this change happen for silver? Like which domino falls first, and then a follow-on from that would be specific to, say, the gold-silver ratio. What happens as the profile of the use case for silver changes, and how does that impact the GSR?
Yeah, it's a good question. So historically, silver was used as money alongside gold because, it's less expensive per ounce, and therefore, you can use it for smaller payments. Just imagine if you're trying to buy a cup of coffee with gold, it would be a tiny little fraction of a piece of gold. Right. Where silver, maybe it's quarter of an ounce, tenth of an ounce. So that's traditionally been the role that silver plays as money alongside gold. What's interesting is once they become asset-backed digital currencies, that doesn't matter anymore. You can subdivide gold into much smaller increments. So there is a case that silver becomes less necessary when you do that. But I think there should always still be the physical aspect where you want to make a cash payment to someone. I call it cash, but you're handing them coins. But silver's interesting because unlike gold, it's heavily used in industry, solar panels, electronics. Because it's such a good conductor, and doesn't corrode in its pure form. So it has this huge industrial component as well. I think the mining ratio is about 10-1, yet the gold-silver ratio, I haven't looked at it recently, but it got as high as 120.
I think it's somewhere like 70 or 80. Yeah.
So I think that actually has happened because, a lot of central banks were looking at what's going on with the dollar and started to accumulate gold over the last several years. So you have a lot of central banks buying gold, but they're not buying silver. And so basically, the central banks have created a monetary demand for gold that they haven't created for silver. I think the silver monetary demand is starting to happen amongst ordinary people because, like I said, you could get enough silver to put in a safe and be able to make payments for things, versus gold is harder to do that with. So I think that's coming. Personally, I'm more bullish on silver these days because of that. But with that central bank aspect, I think it's wise to own some of each because if Russia decides to revalue gold higher by breaking the markets, they're not actually, I think they are holding silver as well. Maybe not the central bank, but so it's definitely good to have both. I think silver at this point is far more undervalued. I mean, it's not hit its all-time highs yet, whereas gold managed to touch on its all-time highs and is not that far off from it.
Yeah, exactly right. And I suppose there's the perfect storm potential of a large price or like a run up in the price of gold out of what many have been calling a cup and handle pattern. Simultaneously, a reduction in the GSR would be of great benefit to silver holders and to the value of silver trading into fiat.
Yeah, and I think the GSR is what to look at. People say, what dollar price are you going to start to sell your silver? I'm not going to start to sell my silver at any dollar price. It's more, once the GSR gets down to 30-1, then start moving more into gold. If it gets down to 10-1, then At that point, it makes sense to be a lot in gold because gold's less volatile, more stable. So it's a bigger market.
Yes. So that actually touches on something that I've noticed. I've struggled with it myself over the last few years. It's gotten easier, but I've noticed it in other friends and family as I've tried to talk to them about these kinds of topics. Changing your monetary base in your head, changing your standard off dollars is really tricky to do. For me, it was understanding when I started trading cryptos, and I had parts of my portfolio that were trading exclusively on like BTC pairs, and it didn't make sense to add an equation into sizing things and everything, translating the price of the amount of Bitcoin into Australian dollars or into US dollars, then into Australian dollars. All the while trying to figure out if this trade was going to be worthwhile. Eventually, I had to get to a point where I only thought about the amount of Bitcoin. And then I had a similar realization when I started getting into gold and silver, which was that it's not so much about how much the gold is worth or how much the silver is worth in relation to Australian dollars. It's more about how much of that particular asset I've accumulated. And I wondered, sort of going back to the beginning of the interview, how to get people into that headspace, how to convince people or jumpstart them in the process of understanding that you can change your monetary base in your own life.
Yeah, I think similar as you, the way I look at it, I mean, I'm a math guy, so I think of it as, the dollar's in the denominator of everybody's head right now. But what happens, as the dollar goes to zero, basically that becomes an undefined problem, right? Everything goes to infinity once the denominator goes to zero. So yeah, you got to get the dollar or Australian dollar out of the denominator and put something in there. In terms of convincing people to think like that, I think you can show them historical charts. I think it's macrocharts.com or something like that, because you can look at gold to oil ratio over 100 years, and it's traded in a range of like from 10 to 40 or something. You do oil in dollars, and you have to do it on a log chart. You do take any pair that you want, and you got to put it on a log chart of dollars in the denominator. But if you do, like, look at Dow to gold, people are so big on the stock market. Okay, well, look at Dow to gold. Over the past century, it's gone to a ratio of about 1 several times. Maybe it won't go all the way down to 1, but maybe it'll go to 2 to 3. My brother's big in the stock market, and I don't know if the stock market's really going to crash in nominal terms, but I'm highly confident if you take the S&P divided by an ounce of gold, or take the Dow divided by an ounce of gold, that will crash. It just, the dollar value may not. And people won't see it because they've got the wrong denominator. They'll say, my portfolio is going up, but it's not going up relative to inflation. It's not going up in real terms. It's just going up nominally, but you're not making money. So you have to look at things with the right denominator for sure.
That begs the question, and this is getting into the hypothesis and speculation realm a little bit. There are some market commentators who are predicting an entire financial collapse, and others who are simply predicting a harsh downturn. And I wondered, as you've described it there, as a very extreme downturn occurs, people may not necessarily notice that it's even happening if it's not expressed in the nominal terms. If the amount of money in the bank account doesn't actually go down, and if the stock price doesn't actually collapse all the way down, and the markets don't go through some shuttering standstill and collapse or breakdown of some sort, people might not necessarily notice. While that's all happening, we could well see, as it's happened in the past, overnight revaluations of gold against those fiat denominators. From like a really broad economic perspective, the revaluation of gold and silver against that fiat denominator in an overnight setting, obviously that would have profound ramifications for anyone who is holding these assets and for the central banks who have been accumulating it for quite a while now. How does the common folk who is still dealing with their common denominator being fiat sort of see that event, or how do they come to understand what's happening there? And is it too late for them at that point?
Well, that is something that worries me, because I think, an over the weekend revaluation is a possibility. I think it's a pretty strong possibility. If you look at the structure of the futures market, especially if you look at silver recently, it's like their supplies get lower and lower and lower, but the price doesn't go up. Because there are so many paper contracts that the price can be whatever, it gets driven to based on buying and selling of these contracts. But once the physical runs out, what do you do? If you don't let the price go higher before the physical runs out, then there's going to be a non-delivery, and then you shut down over the weekend, settle everybody on the paper price, and then you open up on Monday at a higher price.
Right.
So I think that's a real possibility, and I think that would be awful thing to happen for people, that have not positioned themselves in advance. Because at that point, it has now gone up to reflect the real inflation, but it's, I won't say it's too late to get in, because it kind of matters what happens from there. But
right,
you have failed to get any protection at that point for what's happened.
Yeah, a pretty extreme outcome for a lot of people, I suppose, if that were to happen. And I don't know about the statistics in the US for sort of private ownership of gold and or silver. Here in Australia, it's something in the region of 1 or 2% of the consumer market holds any position in physical gold and silver, or to some degree any exposure whatsoever. So I have similar concerns that many people would be left holding the fiat bag, you might say, and wouldn't necessarily even notice that it had happened if they weren't watching financial news. Because the nominal value would stay the same.
I think in a price reset scenario like that, I think they'd notice, and I think that's why there's probably a lot of motivation to not let gold and silver prices run up, is because they are the canary in the coal mine in terms of people hear that if gold prices were to go up $100 in a day, and it starts hitting news media. Everybody'd be like, why did that happen? Well,
right.
Maybe it's the money printing. Oh my goodness. I better get some before it's too late.
Maybe it's the money printing. Yeah.
Maybe.
When you were talking about that physical supply and demand interaction, I know that beyond Citizens for Sound Money, that you're also involved with another group, Silverback Precious Metals. I'd love for you to talk a little bit about that, if possible. I saw a clip on Reddit of you soaring down the 1,000-ounce silver bars. I think it would be great to talk a little bit about the motivation behind that. I know that we've just sort of mentioned it, but just to be clear for our listeners about what you do with the 1,000-ounce bars and why.
Yeah, so there. Yeah, that's true. I'm a partner, so that's a for-profit business. There's a number of us, and if you look back, there's a State Department memo that came out. I think it was 1974 after Nixon closed the gold window, and to paraphrase, it basically says by creating a highly leveraged futures market, it will introduce a lot of volatility and it will dissuade people from holding physical. So, the creation of that market was intentional, and people talk about, are the markets manipulated? I'm a big believer in what Luke Groman says, which is the market itself is the manipulation. When you can have silver go down $1 in a day, which wouldn't be possible without this kind of highly leveraged market, it discourages people from holding silver. They say, I don't want to hold silver, it's too volatile.
Right.
And so that's and the answer to that is to have real physical price discovery. And that's part of the motivation for what Silverback Precious Metals is doing is, these 1,000-ounce bars that they use on the futures market, getting those, cutting them up into slices, stamping them with nice designs and selling them to people is partially motivated to kind of tap into that desire for physical price discovery, because it's also, you could also look at that as an arbitrage opportunity. There's all sorts of mints. Those mints are all fixed capacity for the most part. And so when demand increases, they can't produce more coins. And so what happens is the premiums go up. Even though, at the same time, the COMEX bars are, at $22.50 an ounce today or something like that.
Yep.
But then Silver Eagles are $13 above that. That's because they're fixed capacity. So by sawing up bars, which, we can add more and more saws as we need to meet demand, we can keep the premiums at a fixed premium versus those COMEX bars. And as that happens, just take more and more of them.
That's really cool. A pretty fun project, I'll bet. It must be nice to get into the workshop and get your hands dirty and collect all those shavings and such.
Yeah, and melt those down. I just got delivery of vacuum casting equipment. Probably take a couple weeks to get it all set up, but should be able to do 10,000 ounces a week with that in like highly reflective, beautiful vacuum cast bars and rounds.
Beautiful. That'll be fantastic. Since you mentioned the premium price disparity and sort of the way that some of that gets calculated, I wondered, as we see, and it's already happening, as we see a divergence of paper pricing and physical pricing, and you can call it premiums, you can call it a markup, you can call it whatever you like, but it's a fundamentally different price profile for a physical ounce of silver than it is for a spot ounce of silver. And at what point, in terms of price difference, does that sort of break down from your perspective?
Well, unfortunately, I don't think it does, because that COMEX or the spot price, that is a price for physical. It's just Joe average person can't get it. It's only big dealers that can go get it. Sometimes they do tack on some premium on top of that for delivery, but you can get bars, at that price or close to it. So the trick is you got to open up a conduit that turns those bars, that can scale and turn those bars into physical products. And they're, that's what Silverback is trying to do. But yeah, there's got to be a disconnect at some point, and more mints or more production capacity coming online as well to keep up with the monetary demand. But unless the supply chains expand their capacity, there could always be a disconnect.
Thank you so much, Jim. For our listeners, if they're wanting to reach out to you, best to chat to you on Twitter. I know it's at Jim Forsythe 5 is your Twitter handle. And otherwise, they can reach you, I'm sure, at citizensforsoundmoney.org. Thank you so much for your time today. I really appreciate it.
Yeah, and Citizens for Sound Money is with the number 4 in it. And then also Twitter at For Sound Money, the official Citizens for Sound Money Twitter account.
Wonderful. Thank you so much, Jim.
Thank you.